My name is Michael Guyette, publisher of the Lead Lag Report. Matt, introduce yourself here for the audience. Who are you? How'd you get so interested in Bitcoin, and what in the world was the catalyst for you to start Giga Energy?
Yeah. Appreciate you having me, Michael. My name is Matt Lohstroh. I'm the co-founder and CEO of Giga Energy. And what we do is we monetize wasted energy in the oil field. And there's this massive problem in particular where oil and gas producers are taking natural gas and burning it because they need to continue flowing their oil production. And this stems from the fact that oil is super easy to transport, but natural gas is super expensive to transport with the pipelines. And so we're taking that otherwise wasted energy and using it to mine Bitcoin. My business partner and I, we co-founded this business back in 2019, and it all actually stems from Twitter. So we saw a tweet online of another person doing this in Texas. I knew Brent was third generation oil and gas, so I sent that tweet to him. I was like, "Can we do this?" He looked at the tweet and was like, "Absolutely, I got the connections. Let's roll."
Okay, so let's go through for the
Yeah.
audience to explain sort of what exactly the connection is with oil drilling, natural gas, and what exactly flaring is, because this is something that I myself was not that aware of. Although the moment I started hearing some of your conversations, like, all right, that makes sense, and obviously I've seen how that flaring takes place on the road. So talk through sort of what is the idea of wasted natural gas when it comes to oil drilling.
Yeah. So when a company like, say, ExxonMobil discovers a new oil field, there's no infrastructure in the area. And what I mean by that is there's no pipelines. And these pipelines, they take billions of dollars and years to build, right? You got to have regulations surrounding them, right of ways, federal regulations, all sorts of stuff. And so to actually establish a market for that natural gas, it's quite sticky, and so there's this lag time between when this infrastructure can come into place, even in somewhere like in the first world, like the U.S. And so this oil's still there, and you don't get to choose what comes out of the ground. Oil and gas flow out at the same time, and what oil producers are left with is saying, "Hey, we really need this oil," and they're so desperate to get to it that they literally burn this natural gas off in an open flame on the oil well, and that allows them to continue flowing their oil by relieving the pressure. And so that's the problem. What we do is we come in and we take that natural gas that would otherwise be flared and we redirect it to a natural gas generator. That generator creates electricity and it powers a data center on site on the actual location 40 or 50 feet away from this wellhead. And so this whole process is happening on the wellhead. But then what we do is we use the Bitcoin mining to digitally kind of create this value. And so we're able to transmit this value away.
Is the gas that's emitted, that sort of wasted gas that's flared, is it primarily at the start of an oil well's life, or is it throughout the entire oil well's life? And I ask that because it would seem to me, as somebody who doesn't know sort of the mechanics and physics of this, that maybe it's sort of just an initial phase of an oil drilling situation, and then it's really just pure oil after that.
Yeah, good question. So what happens is there's a couple reasons why flared gas is flared. One is there is no capacity or market for it. Two is there is a market, but the market's full. So we have a pipeline, but it can only hold 100 units per day, and we're at 100 units. Sorry, we can't bring in. And then there's other types in terms of where the quality is too low. So there are like a lot of situations where gas is continuously flared throughout the life of the well. And but the majority of the situations are where the majority of the gas is flared in the first 18 months of the well's life, and then it continues to decline from there. And so, what we've also seen too in these shale plays where people go out and do fracking, there's a lot of low hanging fruit. And so, we're looking at like high oil, low gas. And so people are going after that, and so that's kind of been eaten up, and so now we're starting to get into that maybe 50 oil, 50 gas, lower oil, higher gas, as people go after that. But what you also see too, so in the U.S., the answer to your question would be primarily it's really flared at the beginning of the oil's life, and there's not a ton of assets that are continuously flared. Now, when you go to like developing countries, it's a different answer. You have places where there will never be infrastructure, period. T. So people go out and just rip these wells, like massive amounts of so there's enough flared gas in the world to power about 2% of the world's total energy demand. So I'd say it's in the U.S. It's mainly in the front end, and then in outside the U.S. it's mainly for the life of the well.
And what you're doing, correct if I'm wrong, is you're providing essentially the infrastructure to do that, meaning the actual rigs, the combustion engine, all that stuff.
Exactly. Yeah. So what we do is we come in. So at Giga, we manufacture our products in house just to have quicker lead times. So we take a natural gas generator that we manufacture in Texas. We take a Bitcoin mining data center that we manufacture in Texas, and then we take Bitcoin mining computers. We put it all together and then put the solution on the oil producer's well, and immediately start taking away their gas to solve this issue, right? And it solves a couple issues. One, no one likes flaring. Flaring in and of itself is about 91% efficient. And so that 9% of uncombusted methane is a big deal because it's all escaping out into the environment. And methane as a greenhouse gas is 25 times worse for the environment than CO2. There's this massive amount of regulatory pressure and public market pressure on investors. We've talked to multiple publicly traded companies, right? Sometimes they're like, we don't even care if we get paid. Like, we just need to get this stuff off, and we can't. Or they won't drill wells if they know they're going to have to flare. And so, like, the tides are really turning in the public markets. And for instance, too, the World Bank has an initiative to ban flaring worldwide by 2030. So, like, everyone's very much aware of this issue, and what we're able to do is Giga is able to come on to the producer site, remove a thorn out of their side, and say, "Hey, we'll fix this issue for you." Reduce their emissions profile, and at the same time, gain access to cheap electricity.
I'm just curious, is there a reason why, just from a business model perspective, you don't take maybe a commission, so to speak, off of any Bitcoin that is mined with the actual manufactured, rigs and all this stuff?
So we have two business models. One where we mine the Bitcoin in house for Giga Energy, our company. We put up the capital for it and mine that, and all of that Bitcoin goes directly to us, not the oil producers. And then we have another model where we sell our equipment to other people who may not necessarily want to. They want to do the mining. So, right, we've talked to some oil and gas companies. We've talked to some other folks, and in that instances, there's nothing necessarily unique or irreplaceable about our equipment. There's no IP involved or anything like that. It's really just optimization, lower cost, lower lead time, and just better industry standards.
Gotcha. Okay, so that's actually becomes interesting. I think then from sort of building a moat perspective. Obviously, it's first mover advantage, but
Mm-hmm.
if you're saying there's no IP or patents around the process, how do you protect yourself from other competitors? Because listen, candidly, it's a no-brainer concept, right? You're
Yep.
you're turning waste into something that can be monetized.
Yeah.
But but once that catches on, hopefully like fire, right? You're going to have competition come in, and from what I'm hearing from you, it's not. It may not be terribly complex if you have the right engineers to kind of create a competitor.
Exactly. And that's a good question, right? And so this the TAM is massive. There's enough flare gas in the world, right, to power 2% of the world's energy production. So we know the market and the opportunity is massive. But believe it or not, there's really not that many players in it. And this market's been evolving since 2018. And really, I've nailed it down to kind of two reasons in particular why people aren't getting into the space, or really scaling up once they do get into the space, right? And one, it's access to capital, and two, it's operational experience. And on the ops side, you have to answer multiple questions like, can you run a natural gas generator? 255 moving parts, just one of them. Then you got to be able to say, hey, can I find flare gas? Once you find the flare gas, can you convince the oil and gas company that we're not some tech bros and we really know what we're doing and we can safely operate on your site? And then once you're on the site, do you fundamentally understand all of the operators' pain points to the degree that you're not going to impede any of their oil production? Because the second you do, you're going to get kicked off because you're just like this, like gravy on top. But if you start getting in the way, you're gone. And so let's say, hey, you check all those boxes, you know completely what you're doing on the ops side, both Bitcoin and oil and gas. You're good. Like $2 million is going to get you one generator and one data center. That's not like enough to make a dent in any of these operators' flaring productions. In fact, it doesn't solve their problems. There's over 5 trillion cubic feet of gas being flared each year. And so for that reason, there's been very few people that have scaled up in the space. just because the access to capital is hard. And right, and then we hear a lot of times too, oh well, the oil and gas companies are going to get into it. Maybe so, but not anytime soon. All of these operators, and the saying I hear time and time again from all these different oil companies is, "We're an oil company. We're not Bitcoin miners. Like we'll sell the gas, but we're not doing anything past that. We're not interested in these revenues." And so the oil and gas companies themselves, they have no interest in getting into the space. And when you see headlines like ExxonMobil mining Bitcoin, all they're doing is selling oil or selling their natural gas supply for pennies on the dollar to a Bitcoin miner. And so the largest one out there is Crusoe Energy. They've done an amazing job scaling up the space. They've raised about $500 million in equity capital, $700 million total, and they've gone out in the markets, and that's really it on the scaling side. Like there's another company called Great American Mining. They scaled up and got acquired by Crusoe Energy earlier this year. So there's very few people, and it really comes down to the ops side as well as access to capital.
What's a I'm sure this is a very basic answer, but maybe for me and for the audience, what's typically the percentage of cost that the sort of powering of miners takes relative to actually getting an actual Bitcoin, right? It'd be, how much cost comes
Yeah.
out of not of basically getting it free, right, from the gas flaring that you're trying to efficiently convert.
So like, are you asking like what's their cost of acquisition to mine a Bitcoin?
Well, yeah, I guess you versus everybody else, right? That'd be the correct
Okay,
answer.
yeah. Okay. So the landscape of energy production, right? Bitcoin mining is measured in kilowatt hours. The average price of energy right now in Texas is like 10 to 12 cents. That's kind of high right now, maybe a little bit more just because of natural gas prices, but they're coming down. But if you go in and the power you use at home in Texas is 12 cents. A Bitcoin miner breaks even right now, and we're in a bear market, right? A Bitcoin miner breaks even at about 8 cents. Our energy production on average is approximately 2 cents. A average power purchasing agreement by a very competitive Bitcoin miner on grid is what we call it in the nomenclature. If they signed a 10-year hedge, right, they're in that 3 to 4 cents range. If they signed a 10-year hedge, like back in 2020, 2019, like today, if you sign a long-term purchasing agreement, you'd get lucky to get 5 to 6 cents. So I'd really say like 2 versus 5 to 6 is our cost of energy relative to other people mining Bitcoin.
Yeah, I mean that's tremendous. So I'm curious. So you're going out there. Yeah, you're a smart guy. You're energetic. You got to sell. You got to convince these oil companies that this is not only worth doing, but that they can, conceivably make quite a bit of extra money from this, and not necessarily play money for a company. It can be quite substantial at scale. What are some of the pushbacks that you get? You mentioned some of them that were oil and gas companies, were not Bitcoin companies, but what else are some of the skeptics saying?
Uh, are you saying skeptics on like the operator side or
Yeah,
just
on the operating
skeptics?
side, right, right.
Yeah, on the operator side. So, I mean, the biggest one, man, is safety and operational knowledge. Like, 'cause you got to like the type of person that wants to come onto these oil well sites is almost never an oil and gas kind of person, right? And so there's a lot of hobbyists in the space that find it really cool, right? But then, like, there's all this operational knowledge coming in, and it's like, oh, well, they're just renting generators, right? And if you stop pulling their natural gas production, then that's going to impede their oil production. So, how do you maintain generators online with fluctuating natural gas production, because that natural gas doesn't come out at the exact same rate per hour every hour. It varies up and down. And so there's just all these nuances on the operational side that are very difficult. And the operators know this right off the bat. And so they're very skeptical of that. Um, a couple other things too, mineral rights. That's always a big concern, and so making sure that everyone's very comfortable with what the lease language says, and that we're compensating the mineral owners exactly what they're owed, right? Because they don't want any clawbacks. And then just the emissions profile, so making sure air permits are in place and everyone's safe with operations from a regulatory sense.
Yeah, no, that's interesting. You mentioned that obviously it's been a Bitcoin bear market. It's been a bear market in pretty much everything except, ironically, oil itself, or at least oil company stocks. Talk us through how challenging it's been to try to build it in an environment that you don't have the tailwind with you on, right? You can argue that there's in general increased skepticism around cryptocurrencies. I get the argument that cryptocurrencies and Bitcoin are different, but a lot of people will conflate the two, right?
Yes.
Especially given all the headlines around FTX and all this stuff. What's been the macro environment been like in terms of trying to push the micro effort?
Yeah, and so for us, it has been nowhere near as bad. And the reason why is we manufacture our own equipment in house. And so the second we approach an operator, that really gives us this ethos of like, hey, these aren't like kind of these, they're not irresponsible. Like maybe they're irresponsible long on Bitcoin, but they really know what they're doing on the hardware side of things, right? And so the on that's really tremendously helped us in terms of like keeping us along in terms of credibility. We've seen. I'll tell you another big concern that operators have is okay, I don't know about Bitcoin. I don't care about Bitcoin. I don't believe in Bitcoin. I'm now going into business with someone's whose main revenue derives from Bitcoin. And so like that's usually like a big thing. And then sometimes they're like, okay, we'll be fine. But every now and then I've seen an operator get burned by a Bitcoin person because they're like, oh, sorry, man, we can't take the contract. Bitcoin's too low. Right after they signed up for it, and they've been expecting to bring this well online, and then they start scrambling. And so that's that like that's kind of big. The big thing is really trying to move around other people in the space of making sure, hey, we really know what we're doing on the operational side. We own the generators, so our break even is significantly lower than anyone else using natural gas, and we'll be able to maintain optimal uptime. So definitely the markets are not as nice as they were a year ago, but it's uh, I'm waiting for it to get worse, is what I would say. It's by no means unbearable right now.
And what's the typical life of a generator itself? I mean, how much can you squeeze out of it?
Yeah, about 50,000 hours of continuous runtime, which comes out to a little over 5 years. There's about 8,700 hours in a year.
Okay, so actually, you don't really need to. Assuming that you don't have to, that you don't really necessarily get on new clients for the most part. You have it out there. You don't necessarily need to sort of replace it that quickly. So it seems like it's a pretty interesting, stable revenue stream. Unless maybe I'm misinterpreting it. Unless it's just a one-time purchase. Is it a lease model or a purchase model?
So we own the equipment. So we manufacture everything in house, and we own it, and then we simply purchase the gas from the oil producer. So yeah, we actually own the generators.
Gotcha, gotcha. Okay, interesting. Okay, now so you said you expect things to get worse, which is probably not exactly a very popular opinion among among maximalists. But that's I'd argue actually exactly what you want to happen if you're a maximalist, so you can load up more. Take us through. Let's take a step back. Take us through sort of the broader case for why Bitcoin isn't finished, so to speak. I think a lot of people would argue that last year and a half, 2 years was a bubble in the entire space. Bubbles can take a long time to get back to prior highs, if at all. Talk us through your thoughts on where we are in that cycle, because I think you and I can argue about the likelihood of Bitcoin going higher, but the institutional adoption point, which was a major catalyst for a lot of the arguments for that trend higher, that's probably going to be delayed quite a bit.
Yeah, yeah, most definitely. I'd ask someone, right, when they ask about like is Bitcoin finished, define finished, right? Is spot price zero? Like what is that? Bitcoin as its value functions amazing at $1 coin or $1 million a coin of transmitting value through time and space with no intermediary third party. Like that's the goal of it. And so the goal is not to get rich. That's simply asset appreciation is just really a byproduct of the situation that happens as there's more adoption. I'd look at the amount of asset classes that have like had multiple 80% drawdowns, like what, five, seven of them over its life and recovered every single time. But like my personal investment thesis in Bitcoin is there's 21 million of them. Everything hinges around that. There's only ever going to be 21 million of them, and everyone knows the supply schedule that's going to come out, and no one is involved in between transactions. That's to me the coolest thing ever, and that's my investment case. And so I trust a fixed supply over a global reserve current currency that can be infinitely printed, and I have absolutely no say in it. Like that to me is what's really interesting, and that's what I believe in. Nothing else drives what we do other than those two things. On the institutional side, though, I think that like a lot of people forget about things. Like for instance, well, yeah, like big thing that's in the space too that's still really holding people back is the criminality aspect, right? Is having that like career risk. I've talked to a lot of fund managers, right? And one of the big reasons they won't go in is Bitcoin has kind of like that illegal criminality, laundering money, drugs, things attached with it, right? Terrorist financing. And so that's like a big reason I think that's holding a ton of institutions back is like they don't want to be the first guy through the door. Um, Whether they believe that or not, they're not willing to risk that. And so that's and then on the other side too, I think people expect endowments and pension funds to buy Bitcoin and then just hold it as it goes up forever. And like that's not the case. They're not trying to get these ridiculous returns. They're trying to get a certain target and then they're going to sell it and reallocate. And so I think people really over like obviously institutional adoption is very good, but I think also some people forget the different aspects to it as well. Yeah. Sorry about that. Yeah, no, I mean that's these oil and gas companies don't realize what what these Bitcoin miners are capable of. That they really know what they're doing on the oil field, like like GAM specifically. And so they went out all through up Bach in North Dakota, took on a ton of stuff. And so yeah, these operators once they realize you know what you're doing, they'll really like you, and you can really again just help reduce their emissions profile at the same time. It's just a win-win scenario. There's no downside if you can operate correctly. What I think they should do is just proceed as normal. Nothing really needs to change, in my opinion, on the front. I think we're moving on a great front. And what will happen, I don't think, whether I think we should change proof of stake or not, I think is irrelevant. Bitcoin's never going to change from its proof of work model or the 21 million issuance. That's kind of been settled all the way back in 2017. And so I think that whether people want Bitcoin to move, like it ain't going to happen. So that's where it's at right now, in my opinion.
And everybody here, please make sure you follow Matt Lohstroh on Twitter, and if you are curious to learn more, check out Giga Energy as well. Obviously, let's talk about the VC side for a bit, Matt. From a raising a capital standpoint, I mean, it sounds like you basically kind of bootstrap this, you and your partner. You got some great organic out of the gate growth. Are you actively out there trying to look for capital, or what's the sort of state of and sentiment when it comes to trying to find some flow of money here?
Yeah, so we've gone through two equity rounds, venture capital raised. So we raised a pre-seed and a seed round. This has kind of been part of our evolving business model since July of 2019. So my business partner and I, we started this when we were sophomores at Texas A&M. Started the business, right? Brent's third generation oil and gas, and we quickly discovered the issue of to get money, you need experience, and to get experience, you need money. And so we were very fortunate to be getting into Bitcoin mining when it had a pretty low capital requirement, and so we were able to kind of bootstrap a lot of that ourselves. We were able to drag ourselves through all sorts of different things like running projects for other people, revenue shares, selling equipment, deploying equipment for other people. And then in August of 2021, we raised a pre seed. And then in March of 2022, we raised a seed round. There's a Series A out on the horizon that we'll eventually be raising for. And in the meantime, between March 2022 and now, we're doing several kind of project financed uh, opportunities in the market that we've since raised out on the markets to kind of continue mitigating this methane out there.
What I like about this is that independent of one's view on Bitcoin, you're doing what every entrepreneur should be doing, which is identify a problem and find a way to fix it and monetize it, right? So I mean that I think makes a tremendous amount of sense. Now you had touched on the international side. I know it's still obviously a younger company, but what are some of the thoughts on trying to expand outside of Texas, outside of the U.S. broadly?
Yeah, absolutely. So we have a pilot project going online internationally in Q2 of this year. So that'll be coming online in South America. And then we have a couple other opportunities that we are currently kind of working through the processes of. And right, these, especially being a young company and international, it takes a long time to get to this point. So the South America place that took us about 8 months just to put a pilot project online. So working with a group down there. So that's where we want to go, and that's inevitably where we need to go. Really, the only place with consistent flare gas at significant volumes is going to be North Dakota, and then kind of random one-offs, Montana, a little bit in Utah, a little bit in Mississippi, kind of all over the place. And so that's directionally where we're headed, is to these countries that are developing and just do not have infrastructure in place and won't have infrastructure in place anytime soon. And the flares out there are just tens of megawatts in size, and so that's what we're hoping to solve.
Yeah, and let's turn that, because I think it's a good direction to go, Matt. Which is the question on everybody's mind is survivability, right? If Bitcoin were to keep going lower, and I understand the 2 cents versus the higher is a big component of the ability to survive, but what sort of is a worst case scenario for you guys, Matt?
Okay, put it this way: it's always profitable for someone to mine Bitcoin. There's 900 being produced per day, and someone is going to be able to mine that Bitcoin, no matter the price. Uh, we view it as kind of this power stack of you have X percentage of Bitcoin miners at 1 cent, 2 cents, 3 cents, and you have this distribution. As the people at the top of the waterfall become unprofitable, the rest of the 900 gets distributed amongst the rest. And so if you're have the cheapest cost of electricity, you're always insulated from the market. And so that's really where we're at. So are we going to be are we ever going to be unprofitable mining Bitcoin? That's really not on the radar for us in terms of a concern.
Right, and that goes back to sort of the how big of an input cost is it relative to keeping the business up and running. So to the extent that you're providing the equipment,
Correct.
you're doing the pick and access, so that's a different model anyway. But yeah, I think it's an interesting thing to go through.
Great question, by the way. It varies really just on the situation. Macro wise, just where nat gas has been headed over the past 12 months, I've seen gas purchasing agreements get signed just stupid high. Like I don't think anyone should ever sign a gas contract over $1.50. I think it's just silly, and I've seen like $2, $3 contracts get signed at like $8, $9 gas, right? Henry Hub.
Wow, yeah.
Flare gas wise, 5.20 cents that's really cheap, especially in this market right now. I haven't heard of many deals getting signed that low. Probably in that kind of 50 cent range is what's common right now. And what's important too, we've seen operators go into space and say, pragmatically, you can look at it and be like, your gas is worthless. Therefore, like you should just give us the gas for free, and then we'll help you out on this other side of things. Mathematically, on paper, that might be true. But that doesn't make someone feel very good. That doesn't make someone feel wanted. That doesn't start a partnership or a relationship. And so, holistically, when you zoom out, you want these operators to be happy and have a good relationship, especially when you have problems come on the well. Are they going to be with you on the side, helping you out? And so, we found it pays dividends to really not like obviously you want to have a very competitive price, but make sure there's no price gouging or taking advantage of these situations with these operators. No, on that end of things, Bitcoin miners will continue producing blocks. How many Bitcoin miners produce blocks is unknown. And if Bitcoin were to go down to $2 a coin, there'd be a lot less miners out there competing in the market. But there's always like Bitcoin, the 900 Bitcoin per day will always be mined by someone. Is profitable for someone. Um, the 4 year cycle, right? You bring up a very good point. Parker Lewis just wrote an article about this, and what he told me a long time ago, a couple of years ago, was Bitcoin is not it, all debts are dollar denominated, and when Bitcoin is going through this economic cycle, it's not a recession hedge; it's an inflation hedge, and so. And you bring up a good point. I've always been fascinated. It's like Bitcoin was started at the precipice in the beginning of the '08 meltdown. Like that's why it was created. And so we haven't had anything since. And so I've been fascinated to see how Bitcoin's going to perform in this market. I have absolutely no idea. But what I do know is all debts are dollar denominated. And so when you have an asset that's liquid 24/7, 365, and people are having massive liquidity crunches, you're going to have situations like that March drawdown with Bitcoin where it had a 50% candle in that day. So I don't know where Bitcoin's headed relative to the economy, but I do know over the long term, it's an inflation hedge.
Is there because a part of this obviously is there's an ESG element to it, obviously, sort of the environmental impact of the flaring, and you're reducing that. Have you been going out to local municipalities, talking to politicians, trying to see if you can get some government support or maybe tax breaks around this? Because that seems like a natural direction for you guys to go.
Yeah, so so Wyoming put out a really good state bill, which was there's this thing called severance tax. And severance tax is essentially royalties for a state. If you pull hydrocarbons out of the ground, you have to pay a certain percentage, no matter what, to the state. And so Wyoming had a bill which was essentially if you mine Bitcoin with flare gas, you don't have to pay severance tax on that if you mitigate those flares. And so it's a great thing incentivizing that. And so we're helping sponsor a bill in the state of Texas for that in particular right now. Wyoming's really led the way on that, as well as we're working on the federal level and helping kind of author a bill for tax breaks for Bitcoin mining via flare gas in this environment. So one of the senators reached out to us, just kind of asking for opinions. So we're going to help them like that. And so hopefully that'll hit the floor relatively soon because it's bipartisan. Uh, Republicans and Democrats, everyone agrees these big old flames in the middle of nowhere are bad for the environment and a waste of energy. That's not a controversial things to say, and so that's what we're helping to help with.
So I'm actually fascinated by the what goes into the prospecting side of this. I mean, how do you guys go about even reaching out to different oil companies, whether small or large? I mean, yeah, I'm sure you can get a list somewhere, but I'm going to make the assumption that you're not on LinkedIn sending different executives emails.
Yeah. So there's the most common way is a friend of a friend of a friend of a friend. It's fascinating the amount of relationships that have been formed via that and gotten a project started, and you have no idea it would form. Then all of a sudden, boom, there you are. And then the other way too, that's very common, is satellite data. So and the environmentalists are on this too, right? Like there's satellites out there tracking flares, and so the next best way that we've seen people go out there is really just kind of see these flares with data, and then start tracking down the operators from there and say, hey, you're flaring volume, and that's kind of the very much harder route to go if you don't have connections, right? Say you're a very passionate hobbyist about this, you see a flare, you know it exists. We've had landowners reach out to us and say XYZ is flaring on my grandma's land. Please come out, and the operators are completely unresponsive. So it's twofold, right? One, identifying the sites is a very hard issue, but then once you identify a site, that falls under the qualifications of the amount of gas you want, the quality of gas that you want, the total volume, and the consistency of that over a certain time period. Those start to become very difficult. And then once you find all that, you got to convince the operator to let you on the location.
Right. I mean, that all that sounds like a very long lead time to getting an actual sale closed, right? I mean, what's sort of the typical time from initial contact to actually, implementation?
I mean, if you're doing outbounds, it could take months or a year. If you have an inbound and an operator's like, "We need you," it could be yesterday. It really just depends on their desire to move because it's their site, and so we've seen it. We've seen it play out both ways. If you have the equipment ready to go, we've seen people move sites in days.
So you had mentioned, sort of the state of the miners, whether they can survive or not at much lower Bitcoin prices. Obviously, miner specific, you can argue. Are you getting a sense that you're going to see consolidation among miners? That you're going to see a lot more failures still coming? And how does that make you think about where your place is relative to the future?
Yeah, and you're talking about just general
In
miners
general, yeah,
overall.
exactly. Right, right.
Yeah. Uh, Miners have this fascinating tendency to take debt out on the top, and I get it. I mean, we when we were in the moment too, we were taking certain steps so to really hedge ourselves. So, for instance, instead of running the latest and greatest computers, margins were so good that we bought the worst computers out on the market, and that took our overall total dollar exposure and really reduced it. Um, and so, what miners basically do is go out and just buy the latest, greatest computers the second anyone's willing to give them money. and that's really the problem we've seen in the space. And so people are going to continue to do it. Core Scientifics filed Chapter 11. They took like $300 million out at the top. The other side of things too with these public miners that people just don't, I think, very much overlook is the operational side of things. Yeah, yes, everyone knows, okay, off grid, obviously very hard, right? Takes a very good skill set. But when you look on grid, it's still very difficult. The level of engineering they're doing, it's not like you just have a bunch of nerds walking around plugging in power cords and Ethernets and they sit back and then just collect the revenue. Like there are miners going bankrupt because they're supposed to curtail their load and they can't turn their power off fast enough. So they start consuming too much energy. And so I think the public markets is just riddled with operational negligence and immaturity, and public investors have no idea what's going on, and they can't, right? They're not Bitcoin miners. They don't know what's going on, and so I think there's a massive amount of side for Bitcoin miners in the public markets to just really prove, and the industry is just super immature, just really immature, and it just has a lot of growth to happen.
Is a part of that? This has always kind of been interesting to me. Is a part of that immaturity simply around just the average age of entrepreneurs in the field? And I say that because if you're older, you've been through a few of these business building processes and rodeos. You're probably not going to, using your own wording, right, take out all this debt at the top, right? And I have to assume there's sort of an experience aspect and age aspect to why some of these companies fail.
Yeah, I mean, there's old dudes running these things. They're very wise. I think it comes down to a couple of reasons. One, the industry is only 14 years old, and when I say industry, I mean Bitcoin. Bitcoin just had its 14th anniversary. Like Bitcoin mining didn't really get started like industrially till like 2013, and then once that got going, you didn't really have real capital being invested until 2017. And so this all that's being developed, and like for instance, I'll give you an example. We make Bitcoin mining containers for on grid or off grid solutions. We sell a ton of them. People love them. We take them to trade shows. We I've personally been welding boxes since 2019. Then we brought in our director of product, Shiv Gupta. We went in and just harebrained everything. And in January of 2022, we decided to start selling our containers. We took into all these trade shows, and everyone, all these execs, and everyone was looking at our boxes like, this is just one of the sexiest boxes I've ever seen. I don't know how you sell it this cheap, like yada yada yada. Like, and everyone, like, we have one of the top containers on the market. That does says more about the industry than it does us, in my opinion. The fact that like a couple of 20-year-olds were able to make something competitive on the market that quick, like that's not like a pat on our back. That's a shame on you to the industry. And I think it's just super nascent, and there's so much learning to be had. I think we're still just getting started.
Yeah, and you had used that term earlier, the sort of not just a bunch of crypto bros, right? And I know that's a term that's kind of used kind of jokingly, but the reality is there are a lot of senior executives that do have that impression and won't even consider working with companies because that's how they view it, right? A bunch of young kids or whatever would be in the industry trying to build something off of something that they themselves are not convinced of. How do you think about just in general coming across more professionally to those skeptics that have that mindset, right? Because I got to imagine that part of the prospecting and selling process is also trying to convince those you're trying to sell to that you're not like these guys putting memes out on Twitter.
Yeah, we're not like other guys. Um, the biggest thing that really helps establish our ethos personally at Giga is the fact that we manufacture our own equipment, not just the boxes, but the generators. And so to come in and say, we take 255 moving parts, strip them down, remove it back up, and build this piece of equipment that you know of, the type of engine that we're using, they're familiar with, and optimize it specifically for Bitcoin mining. That right there sets the tone. And from there, it's really just maintaining uh, that eyesight, in my opinion. And so that's really helped us out tremendously. Is people right off the bat is like, okay, yeah, you know what you're doing. Oh, you got questions on the mineral side, like you already have those answers down. It's like we've been getting these questions for 4 years now. Like we know all of them. There's not a question you could be asked that like is new to us, and so we just kind of have this preset FAQ on what to answer. Yeah, absolutely. Great question. And so H2S we avoid on site. And so for people that don't know, H2S is a very common reason that natural gas is flared out in the market. It's terrible to burn an engine and it'll destroy your engine in 6 months. And so we avoid H2S for the moment. There are ways of treating it. It's just economically, there's other things to go after that's lower hanging fruit. The other question kind of is pure methane, CH4, has it has a heating value of about like 1,009. That's what comes out of your heater or your stove at home. The type of gas in the field has a different heating value because it has ethane, propane, butane. It's all mixed together. Everything's a little bit different, the recipe of this gas. That's why they call it natural gas, not methane. And so, depending where you go, for instance, North Dakota can have super hot gas, and it could be like have a 1,600 heating value. And then just like kind of like a really good average in the space is like 1,100, 1,150. That's like pretty average. Like if you would just look at like normal gas. However, that's still significantly higher than pure methane. And we build our own generators. Specifically, this is one of the reasons why we wanted to go out there and do it. And so our Caterpillar engines have the capabilities. We usually go up to about 1,250, 1,300 BTU gas. We knock as many of the liquids out as we can, and get it as dry as possible, and we're able to burn that. And so if you come in and an operator says, hey, my BTU is XYZ, we go in, we take the timing of the engine, we set it to say 22 degrees. We know exactly what we need to do to achieve the horsepower output relative to the heating value. And that level of efficiency can only be achieved really when you own the engines and you know what you're doing.
Yeah, super interesting. Everybody here, please make sure you follow Matt Lohstroh. Matt, maybe for the final few minutes here for the audience, all this is interesting. A lot of people here are hopefully fascinated by what you're trying to do, but admittedly, it's not really that accessible for them, right? So, are there any future plans for trying to make this available either? I mean, hopefully, as a public stock, right, for you guys, which would be a phenomenal thing in the future. But how do those listing maybe somewhat engage with what you're doing?
Man, I'm trying to go public. Just give me some time.
Yeah, exactly right.
uh, Man, it's a very unique space, and I get this question a lot. So many people are just fascinated by it, and as was I. And I was very fortunate. My business partner, third generation oil and gas, and we're the second guys in Texas to ever do it. The It's very hard to get exposure specifically to this side of the business. I think as the industry continues to evolve, Crusoe is going to go public. Hopefully, Giga will go public over the next decade, and that's probably the soonest people will be able to easily get exposure to these markets. There are people out there kind of doing these one-off operations every now and again. They are looking for capital, uh, and so they're looking to get funded. But I'd just be careful because there's a lot of people that think this is really cool, but they've never done it, and the industry is just still very, very nascent.
Again, everybody, this will be an edited podcast on all your favorite platforms. Hopefully, whenever Matt does go public, we can all say we knew him when. So, with that said, appreciate everybody that joined. I'll be doing a number of spaces in the coming week as now I'm back on track scheduling wise. And everybody enjoy the rest of your Sunday. Thank you, Matt. Appreciate it.
Thanks for having me, Michael. I really appreciate it.